In a striking development that underscores the increasing integration of cryptocurrency into mainstream culture, Washington, D.C. is set to welcome a new bar that embraces the Bitcoin ethos. Pubkey, a vibrant establishment originating from New York City, has announced plans to open a location in the nation's capital, taking over the lease of Hill Country, a barbecue restaurant long favored by Republican staffers. This shift marks not just a change in venue but a broader cultural transformation within the political landscape of Washington, where cryptocurrency's influence is rapidly expanding. Pubkey first made waves in 2022 with its casual, eclectic atmosphere, featuring a unique blend of pub fare and a podcast recording studio. The bar has gained notoriety for its acceptance of Bitcoin as a payment method, a move that aligns with its mission to foster a community for Bitcoin enthusiasts. Notably, in a high-profile moment during the 2024 presidential campaign, former President Donald Trump made headlines by using Bitcoin to purchase food at Pubkey, solidifying its place as a hub for crypto conversations and engagement. The DC location will have podcast studios, event space, all that stuff, confirmed Pubkey owner Thomas Pacchia, emphasizing the establishment's intention to attract a diverse clientele. The closure of Hill Country after 14 years of serving Texas-style barbecue and country music to a loyal crowd highlights a significant shift in DC's nightlife and social culture. Traditionally a haven for Republican lawmakers and staffers, Hill Country was synonymous with a distinctly conservative vibe, often buzzing with political discussions and karaoke nights featuring GOP figures. The transition to Pubkey not only reflects the growing acceptance of cryptocurrency but also represents the changing demographics and interests within DC's social scene. As Pacchia noted, "Anybody that wants to come and talk about Bitcoin is welcome. Literally anyone." This development occurs amid a broader resurgence of cryptocurrency's relevance in U.S. politics, particularly with the Trump administration's embrace of the sector. Key figures within the crypto community are increasingly gaining influence, and the recent announcement of a government overhaul that includes pro-crypto legislation has further energized the market. The cryptocurrency industry, once viewed skeptically by many legislators, is now being recognized for its potential to reshape financial and technological landscapes. In conjunction with these cultural shifts, significant financial movements are also taking place in the crypto sphere. Hound Ventures, a prominent venture capital firm led by Katie Hound, is reportedly raising $1 billion for two new funds targeting investments in blockchain technology that align with the renewed interest in cryptocurrency driven by political support. Hound's previous fundraising efforts have set records. And with the current political climate favoring crypto initiatives, her new endeavors are poised to attract considerable attention and investment. The launch of Pubkey in DC and Hound's fundraising efforts highlight a pivotal moment for both the cryptocurrency community and the nation's capital. As the political landscape evolves, the intersection of crypto culture and traditional politics will likely continue to influence social venues and investment strategies alike. The impact of these developments may reverberate beyond entertainment and finance, potentially reshaping the regulatory landscape as a new generation of lawmakers embraces digital currencies. As Pubkey prepares to open its doors in DC, it stands as a testament to the growing normalization of cryptocurrency within American society, a phenomenon that is likely to gain momentum in the coming months as advocacy for blockchain technology and digital currencies continues to rise. The future holds promise for crypto enthusiasts and investors alike as the sector seeks to solidify its place in the American economic framework. In a move that could reshape the landscape of cryptocurrency trading, BexBack Exchange has announced the launch of a new trading platform that promises to deliver no identity verification (KYC) requirements and allow users to engage in crypto futures trading with up to 100x leverage. This announcement, made on March 21, 2025, comes amidst a backdrop of heightened interest in cryptocurrencies, particularly following President Donald Trump's recent declaration to include major cryptocurrencies like Bitcoin, Ethereum, and Ripple in the U.S. Strategic Crypto Reserve. The cryptocurrency market has been characterized by volatility in recent weeks, with analysts predicting continued fluctuations. In such an environment, traditional investment strategies may not yield the desired returns, prompting traders to seek more aggressive trading options. BexBack's new offering, featuring a 100% deposit bonus and a $50 welcome bonus for new users, positions itself as an attractive proposition for both novice and seasoned traders. The platform aims to cater to a growing demand for high-leverage trading options, which can amplify potential returns but also come with significant risks. Leverage trading allows traders to control a larger position with a smaller amount of capital. For instance, if Bitcoin is priced at $100,000, a trader using 100x leverage could effectively control a position equivalent to 100 BTC. If the price rises to $105,000, the profit would be substantial, illustrating how leverage can quickly magnify gains. However, it is crucial to note that while leverage can boost profits, it also raises the stakes, increasing the risk of liquidation if trades move against the investor. BexBack's 100% deposit bonus is designed to enhance trading potential by doubling the initial capital available for trading. This feature, while non-withdrawable, allows traders to open larger positions and potentially increase profits. In a market that is prone to sharp fluctuations, having an additional margin can prove beneficial in managing risks associated with highly leveraged positions. BexBack Exchange is gaining traction with over 500,000 traders globally thanks to its commitment to user-friendly features such as a demo account for risk-free practice trading, comprehensive mobile and web trading options, and 24/7 global support. The absence of KYC requirements further simplifies the onboarding process, allowing traders to start trading immediately without the bureaucratic hurdles often associated with crypto exchanges. As the market reacts to macroeconomic factors, including the Federal Reserve's policies and ongoing discussions around cryptocurrency regulations, BexBack's entry into the high-leverage trading space could attract a significant influx of participants eager to capitalize on market volatility. The platform's promotional strategies come at a time when Bitcoin's price has been under pressure, recently dipping below $85,000. Analysts have noted that Bitcoin's price behavior exhibits patterns reminiscent of the 2017 bull market cycle, although recent divergence suggests a complex interplay of market forces. Despite the current bearish sentiment, there is speculation that Bitcoin's price could recover, particularly as historical patterns suggest a cyclical nature to its price movements. Prominent figures in the industry like Michael Saylor remain bullish about Bitcoin's long-term potential, forecasting substantial price appreciation as adoption increases. In conclusion, BexBack's launch of no-KYC high-leverage trading options could significantly impact the crypto trading landscape by attracting both seasoned investors and newcomers. As the cryptocurrency market continues to evolve, the interplay between regulatory developments, market sentiment, and trading innovations will be crucial in shaping its future dynamics. Investors will need to navigate this landscape with caution, balancing the allure of high leverage with the inherent risks that accompany such trading strategies. In a stunning twist in the cryptocurrency landscape, former President Donald Trump has launched his own meme coin, $Trump, captivating investors and enthusiasts alike. The coin's debut on Friday night coincided with a broader surge in the crypto market, reflecting a shifting sentiment towards digital currencies, particularly as Trump adopts a more favorable stance on the industry. The $Trump token, operating on the Solana network, witnessed an explosive rise in value, peaking at over $75 before stabilizing around $40, giving it a remarkable market capitalization that surpassed $9 billion shortly after launch. The launch of $Trump comes at a time when the cryptocurrency sector has been buoyed by recent positive developments, including the approval of spot Bitcoin and Ethereum exchange-traded funds (ETFs). The reign of terror against crypto is over and the beginning of innovation in America for crypto has just begun, stated David Sachs, Trump's newly appointed crypto and artificial intelligence advisor, during the inaugural Crypto Ball in Washington, D.C. This event not only highlighted Trump's renewed enthusiasm for the cryptocurrency space but also marked his transition from skepticism to advocacy for digital currencies, a shift that has coincided with his presidential campaign. Alongside $Trump, another meme coin called $Millennia launched shortly after. drawing inspiration from the former First Lady. This new token also experienced a meteoric rise, reaching $13.73 with a market cap of over $1 billion within hours. Melania Trump herself acknowledged the launch on social media, further fueling the excitement surrounding these new digital assets. Meme coins, characterized by their humorous and often whimsical underpinnings, have gained immense traction within the crypto community, driven largely by internet culture and viral trends. Unlike traditional cryptocurrencies, meme coins typically lack tangible backing, relying instead on community engagement and speculative trading. The Trump Coin's official website even cautioned potential investors, stating that its primary purpose is to express support for Trump's ideals rather than serve as an investment vehicle. The dramatic rise of Trump and Melania underscores the dual nature of investing in cryptocurrencies. While the potential for substantial returns exists, so does the inherent volatility and risk. As the cryptocurrency market continues to evolve, the surge in meme coins indicates a growing acceptance and engagement with digital currencies among mainstream audiences. As Trump envisions America as the undisputed Bitcoin superpower, the implications of his pro-crypto stance could have far-reaching effects on policy and market dynamics. The positive response from the crypto community may further galvanize his supporters, making digital currencies a key talking point in his campaign. The future remains uncertain, but as the cryptocurrency market adapts to these developments, investors are advised to approach with caution, ensuring that their strategies align with their long-term financial goals. With the ongoing evolution of cryptocurrencies, particularly in the wake of political endorsements and market fluctuations, experts will be watching closely to see how this new chapter unfolds in the world of digital finance. The current state of Ethereum has captured the attention of investors and analysts alike, as the cryptocurrency faces a unique mix of challenges and opportunities. On March 21, 2025, Ethereum's open interest in futures contracts surged to an unprecedented high, raising questions about whether this spike in activity could translate into a rebound in Ether's price, which has seen significant declines in recent weeks. As of March 21, Ether ETH was trading around $1,966, having dropped 6% over a couple of days and 28% since February 21, underperforming compared to the broader cryptocurrency market, which declined by 14% during the same period. This price action follows the failure of ETH to breach the critical resistance level of $2,050. Despite these price struggles, the aggregate open interest in Ether futures rose by 15% over just 2 weeks, reaching a record high of 10.23 million ETH. Major exchanges like BinanceGate.io and BitGet dominate this market, collectively holding over half of the open interest, while the Chicago Mercantile Exchange CME holds a smaller share of 9%. Increased open interest often signals heightened interest from institutional investors, as it measures the demand for leverage in the market. However, it is essential to note that rising open interest does not automatically imply bullish sentiment, as it can also reflect cautious positioning. Analysts highlight a notable decline in demand for leveraged long positions, with the annualized premium for ETH monthly futures falling below 4%, a drop that indicates reduced incentives for traders to adopt strategies that would typically capitalize on price differentials between futures and spot markets. Adding to the complexity of Ethereum's market dynamics are external pressures such as macroeconomic concerns and declining demand for decentralized applications (dApps). The weak performance of US-based Ether exchange-traded funds ETFs has exacerbated this situation, resulting in over $307 million in net outflows within 2 weeks leading up to March 20. Economic uncertainties, including rising recession risks tied to inflation and government spending cuts, have further dampened investor confidence. In contrast, a significant trend has emerged among Ethereum whales, large-scale investors who have been actively accumulating Ether during the recent dip. Over a span of just 72 hours, these whales amassed approximately $236 million worth of ETH, indicating a robust confidence in the cryptocurrency's potential for recovery. Notably, one whale transaction involved the purchase of over 7,000 ETH, demonstrating the ongoing interest from major players in the market. Meanwhile, BlackRock's head of digital assets Robbie Mitchnick has voiced optimism regarding Ethereum despite its current struggles. At a recent digital assets summit, he argued that concerns around Ethereum are overstated, particularly as the market prepares for a new phase involving staked ETFs. Mitchnick emphasized that the addition of staking could unlock significant value for investors, enhancing the appeal of Ethereum ETFs. He noted that Ethereum's successful transition to proof-of-stake has bolstered the network's scalability and capabilities, although some investors feel inadequately rewarded in the current market environment. As Ethereum navigates this turbulent landscape, the interplay between whale activity, institutional interest, and macroeconomic factors will be crucial in determining its price trajectory. Analysts remain divided on the outlook, with predictions ranging from potential rebounds to continued volatility. However, with whales actively buying and institutional players like BlackRock showing confidence in Ethereum's future, there remains a glimmer of hope for a turnaround as the market awaits further developments in the coming months. The evolution of Ethereum's market position, particularly surrounding the adoption of staking in ETFs, could play a pivotal role in shaping investor sentiment and driving future price movements. In the ever-evolving landscape of cryptocurrency this week has been marked by significant developments that could shape the future of the industry. The U.S. Securities and Exchange Commission (SEC) made headlines by dropping its appeal against Ripple, a decision heralding a new chapter in the contentious legal saga surrounding the company. Meanwhile, Solana faced its own controversies, with a politically charged advertisement leading to public backlash and swift removal. As the crypto world grapples with regulatory scrutiny and market dynamics, these events underscore the challenges and opportunities that lie ahead. The SEC's decision to abandon its appeal in the Ripple case comes after years of litigation that has kept the cryptocurrency community on edge. Ripple is still liable for a $125 million fine, but the withdrawal of the appeal signifies a notable shift in the regulatory landscape. This decision alters the playing field, potentially providing a roadmap for other cryptocurrencies facing similar scrutiny, commented legal experts closely following the case. The implications of this ruling could extend beyond Ripple, offering a precedent that may influence how regulators approach digital assets in the future. In contrast, Solana, a blockchain platform known for its speed and scalability, found itself at the center of controversy this week due to an advertisement that sparked significant backlash. The ad, which many labeled as politically charged, led to a rapid decision to pull it from circulation. This incident highlights the sensitive nature of crypto-related marketing and the potential repercussions of public sentiment. Observers noted that the crypto space is still maturing and missteps in communication can lead to substantial reputational damage. Amidst these controversies, Solana also saw the launch of Radium's new token launchpad LaunchLab, which aims to rival existing platforms like Pump.Fun. This new initiative could enhance the ecosystem's appeal to developers and investors alike, fostering innovation within the Solana community. However, institutional interest in Solana futures remains tepid, with low trading volumes observed since the launch of CME's SOL futures, raising questions about the asset's current market appeal. Furthermore, the White House hosted a crypto summit where industry leaders put forth 5 key policy proposals aimed at shaping the future of cryptocurrency regulation. Topics ranged from integrating Bitcoin into federal reserves to enhancing privacy features in decentralized finance DeFi. As discussions continue, stakeholders remain hopeful that productive dialogue with policymakers can lead to more favorable conditions for crypto innovation. The week also saw contentious events unfold at Crypto.com, where a last-minute vote resulted in the reminting of 70 billion CRO tokens, stirring division within its community. Meanwhile, Aave faced backlash that forced the community to scrap a new token proposal for its Horizon initiative, illustrating the growing influence of community governance in decentralized platforms. In other developments, Coinbase introduced verified pools. a KYC authenticated liquidity solution that has sparked debate regarding the balance between compliance and user privacy. Robinhood is set to launch prediction markets through a partnership with Kalshare, introducing a new dimension to its trading offerings. Furthermore, the recent release of Telegram founder Pavel Durov from legal constraints in France led to a surge in interest for Telegram's blockchain project. As the week winds down, the rebranding of the EOS network to Voltus signals a strategic pivot towards Web3 banking, highlighting the ongoing evolution of decentralized technologies amidst rising security concerns. The crypto landscape remains dynamic, with both challenges and opportunities presenting themselves at every turn. Looking ahead, the outcomes of these developments may not only influence individual projects but could also reshape the broader regulatory framework governing the cryptocurrency market. As the industry continues to mature, stakeholders will be watching closely to see how these events unfold and what they mean for the future of digital assets.